You ever take a loss with the same model that gives you bangers 99% of the time? Then you walk away and you just say, oh, it's just the market not delivering today. There's nothing more to analyze here. Today, I want to invite you to take a step deeper because in this video, I'm going to go over my exact framework that I use to review my losses, cut a ton of my losses out, and explode my win rate along with that. And as well, stick to the end of the video because in the outro, I have a challenge for anyone that's still here. You should know your trading model so well that you can hop on the charts at any second and draw it out with incredible detail. This is the ability of pattern recognition that every single trader needs. For example, when it's 9:30 open and I'm on the charts, I should be able to draw out exactly what I would need to see to take a trade. And if it doesn't happen like that, I simply won't take a trade. Let's hop on the charts and I'm going to show you guys exactly what I need. Alright, so hopping onto the chart this beautiful Saturday, I need to be able to draw exactly what I want to see every single time I hop on the charts, right? So say it's 9:30 open, market open somewhere about here, right? What I want to see is, say this is a 15-minute time frame, right, that we're looking at right now. What I want to see is a clear high time frame direction. We know we have a need to move lower, say to a level down here, right? What I want to see is a higher time frame PD array. So say we're looking at a 15-minute, I want this to be a 4-hour and hourly. We want to see the 15-minute, put in this high in the fair value gap, go ahead and manipulate it, create a stop rate, displace below with our change of the state delivery being right here. Then I want to see an eventual pullback to that, pretty much aligned with equilibrium. Then what I want to do is zoom in for my entry because I want to have precision confirmation. And from there, I just want the exact same thing that I took earlier to unfold in this lower time frame. So I take my entry right here on that pullback to the change of the state. We target low hanging fruit as our first take profit. Usually market will pull back, create some structure like this, and then eventually hit our lower time frame draw. Now analyze, in my opinion, this is how I get fractal sniper entries. Right here, this exact model is the same exact model that we're looking at on this time frame. It's the same exact thing. And because of that, this is how I can snipe the market. Watch how I'm able to draw this out with such extreme precision. This is something that you guys all need to be able to do exactly for your own model. Now, if you guys cannot do this exactly as I have just done, you immediately identified a huge weak point in trading. You need to be able to do this so that you can have conviction and complete knowledge and confidence in your own model. Many of you hop on the charts every single day without a clue of exactly what you're looking for. And because of this, you're trading something new every single day, meaning that you're not actually exposing yourself to a confident, consistent system that will generate you a consistently rising equity curve. And because of this, I can honestly say that a lot of you guys are just gambling when you get on the charts. If you can first draw out your model, your next step is about to come. Go to your journal and identify a batch of your winners and a batch of your losses. Start finding setups that look exactly identical, and I guarantee you that you'll be able to find almost one variable that is present in almost every single loss, but not really present in all too many winners. This is your gold. If you're able to remove this variable, you'll decrease a ton of your losses and absolutely explode your win rate. Let's hop on my journal. I can show you guys exactly what I'm talking about. All right, so hopping on my own journal, I've found a couple of photos that I want to quickly review with you guys, and we can use it to show examples of what all my winners have in common and what all my losers have in common. So let's identify first two losers, right? This one, I was way too zoomed in. I recognize that as my issue, but one thing we can also look at here is how, like I said earlier, I took this with the market maker model having the buy side of the curve being a complete imbalance. There was really no generated liquidity except these two small equal lows here. This is something that if we look in either this loser or these winners, there was none of this. It was complete generated liquidity on the side. But if we look here, it's a complete imbalance. That is one thing that a ton of my losers have in common. I can get rid of that immediately. All right, so this is one of my losers that I want to quickly analyze, right? I took these two trades, but I think that the entry model here is the most important thing to understand, right? On this first trade, we had a change in the state of delivery, but the candle right here never fully closes above the change in the state candle's swing high, right? I've noticed that in all of my winners, we have a change in the state happen with displacement, and I can objectify that by saying displacement means a closure above a previous swing high, swing low, whatever I'm taking long or short, and we see a fair value gap opened up in the leg. Now, if we look to the left here, we see this exact same thing happen, and because of that, we got a target to that low-hanging fruit right there. So you can look at this and say, nah, that doesn't mean anything. I don't believe that. But if you seriously look at it, you figure out that these patterns do exist, and in your own trading, you'll see patterns just like this, right? If we just simply looked at this and said, okay, displacement through, close above that swing high with a fair value gap, we can take that to low hanging fruit and we target it and we make bread, right? Simple patterns like this will absolutely explode your trading when you just start looking into them. I want you all to go into your journal and I want you to find similar patterns like this in your entry model, in your narratives, whatever it might be, and you will absolutely explode your trading. One more thing that I want to look at in my trading that I realized is that when we have this exact same model playing out, right? Say this is on a 5-minute fair value gap and we're just expecting to see this 5-minute low get hit, right? We take this on, say, a 1 minute chart or a 30-second chart. I realize that within my trading, when I take this trade, my win rate is drastically lower, right? Expecting this to happen. My win rate is drastically lower because we don't have an overlapping higher time frame model, right? So what I mean by that is that I would want to see a model play out on this 5 minute, right? So something like, it's gonna be a little bit hard to draw backwards here. It's something like generating liquidity down here. I want to see a push higher, and then we want to see boom, boom, boom. Yeah. So we don't have an overlapping model. When we have an overlapping model like this, we can expect to have our win rate much higher, especially for me, just looking back in my own journal. And then as well, when we don't have this overlapping model, say price is literally just dumping, I can expect this to be much lower probability for me. That's one thing that I've learned just simply by pattern recognition and reviewing my own journal. And I want you guys to go ahead and do the exact same for yourselves. Now, this is just something that sadly a whole bunch of traders just don't want to do, either because they're lazy or because they don't see the value in it. If you're a break-even trader, I can tell you that this is the most important thing to spend your time doing, because doing this, you can figure out how can I decrease my losses, and simply just doing that will almost 9 times out of 10 allow you to actually increase your win rate past 50%, past whatever the threshold needs to be, and because of that, you will be systematically and statistically profitable. Now, this is just something that sadly a whole bunch of traders just don't want to do, either because they're lazy or because they don't see the value in it. If you're a break-even trader, I can tell you that this is the most important thing to spend your time doing, because doing this, you can figure out how can I decrease my losses, and simply just doing that will almost 9 times out of 10 allow you to actually increase your win rate past 50%, past whatever the threshold needs to be, and because of that, you will be systematically and statistically profitable. When a new trader gets on the market, one of the most important things to make sure you do is to stick to objective terms. When your trading model is completely objective and there's no subjectivity or fuzziness, we can ensure that we are acting on a systemized basis and ensure that every single time we press the button, we statistically have an expected return. Now, if you don't get any of what I just said, pretty much what I'm telling you is that we need to make ourselves most like robots as possible. And of course, we're human. There is a 0% chance that any of us could act without any emotion. But what we must do is keep ourselves accountable. And what we must do is follow the statistical edge that we know our system has. What I'm telling you to do is go build a checklist and follow it like your life depends on it. Let's hop on my checklist and I can show you guys exactly what I do. All right, so hopping on my checklist, this is exactly what I want to see, right? So I have these drawings shown out to just keep myself in check, right? This is an example of what the higher time frame should pretty much look like for me. This is an example of a full zoom out would be right here. A semi zoom out of what I'm zooming at, looking at during the day, like I showed earlier, the 15-minute, 1-minute model right here. Then this is the 1-minute entry model right here. So then right here, we have a checklist of exactly what I want to see for every single step of the trade up until getting on the charts and looking at it and actually pressing the button, right? So I want to identify the higher time frame model. I want to see a pullback. Then I want to scale in, confirm. I want to see a pullback. Then I want to scale in and confirm. Then right when I've confirmed it, I want to place a limit order and my stop, and boom, boom, I take profits. Once that gets hit, I take 50% off, 75% off. Then I leave runners to the external high, and then if presented, we can leave it to the external model, right? This is a super objective checklist, and this forces me to act objectively with every single trade. The way you do this is you literally just simply follow it during the day. You get on, you identify the model, you press the button. You see the pullback, you press the button. And what you do is you systematically force yourself to follow every single step. If I don't see any of this stuff happen on a one-by-one basis, say right here we stop, I don't see my confirmation, then I'm not taking a trade because I know that my statistical edge is gone, and when I press that button, I have an expected negative return. Trading is a game of inputs. We can control everything that we do up to pressing the button, but after that, we cannot control what the market does. In other words, we can control all of our own inputs, but we can simply not control the output. Because of this, we must make sure that all of our inputs are a result of level-headed decision making that is completely in line with our system. This is how we guarantee an expected return that makes us profitable. To sum it all up, objectify your system. Make sure that when you come on the charts every single day, you are looking for the same exact systemized thing. If I ask you why you took the trade here, you should be able to tell me that you saw this happen, and then your system says enter here. Not, I thought it was going to go lower after this. If we do this, we can then be not worried about what the market's doing right now, where the market's going to go. We can just be worried about where we can apply our system with 100% faithfulness and accuracy. Then, when we come on the charts every day, we won't be worried about making or losing money, but instead we'll be worried about applying our system and creating good habits with 100% accuracy. After reviewing our journal and constantly understanding what our inputs were to create this output, we can find common variables among all of our losses that are less abundant in our winners. If we recognize these and remove these, it is a statistical fact that our win rate will increase. Removing these is what I like to call trade filtering. It's the same as just not trading because of conditions. If I don't see a bigger time frame model, I simply won't trade it. If there's FOMC later in the day, I'm not going to trade it. And if I just don't even have conviction in the setup, even though it follows all my rules, I'm not going to take it. Now, if we see these things happen, we don't just have to not trade, but we can also practice dynamic sizing, where we're going to decrease our size because when these variables are present, our win rate is statistically decreased. So if a loss occurs like we expect it to, it will not hurt us anywhere as bad as it would have if we were using full size. With a conviction filter, a lot of times I'll see a trade that hits my checklist, it follows my model perfectly, but I just simply don't have confidence in it. Now what I'll either do is lower my size or I'll just not take it and journal it later. Most of the time we don't have confidence in the trade because we're scared to take it, and usually we're scared to take it because we don't want to lose money. Now, focusing on money is the biggest problem in everybody's trading. Trading is not a game of money. If you focus on the P&L, you will lose incredibly much more than just focus on what the chart is doing right now. When you take a loss in the morning and you say, I'm going to take this to make it all back, you've immediately lost. You should say, I took this loss in the morning, it wasn't really the best setup, now I'm going to take this A+ setup in the afternoon. That's exactly how you should talk about it, not losing money, not making anything back. If we practice trade filtering and we filter out certain trades that we know have certain variables that from our journal we can tell statistically decrease our win rate, our win rate will jump, our profitability will increase, and our trading success will double. Trust me on this, do this and you'll see the results. It is a fact that when a lot of people go and watch YouTube videos, they learn things that they know are right for them, but they don't actually apply any of it. That is why my challenge for you all today is to go back in your journal and find 3 objective variables that either help or hurt your trading. Go ahead and comment journal in the chat if you did this. Thank you guys so much for listening. If you have any kind of comments, questions, anything you want to throw in the comments, go ahead and throw it in there. I'll be the first to respond. Thank you all for listening to this video, and I pray that you guys can actually use some stuff that you learned today. So without further ado, have a good one, boys, and I'll catch y'all later.